Welcome back to the channel. I am Racky Ryan. Today's video is for entertainment purposes only. Recently there's a stock that just short squeezed. I think now that the same stock is going to have a gamma squeeze. This stock is going to go up in the near term if I am correct. The reason I think this is going to be outlined in this video. So stick around because you're going to want to see why I think that this stock is going to go up in the near term and why I think that a gamma squeeze is going to happen. The name of the stock is Academy Sports and Outdoors, ticker symbol ASO. Recently, I made a video about how I thought the stock was going to have a short squeeze. The stock was trading at $26 per share, and then it shot all the way up to around $30 per share. Today, it is at $29 per share. So that is roughly a 15% increase in less than a week. So now, what I think is going to happen is called a gamma squeeze. A gamma squeeze is when the underlying stock price begins to go up very quickly within a short period of time. The reason for this is because as more money flows into the call options from investors, that forces more buying activity, which can lead to higher stock prices. And if you're confused, let me explain it even more. As the gamma of the stock option increases, this means that the option is getting closer to being in the money. So someone who's selling these calls is going to have to end up buying shares of this stock in the event that this stock becomes in the money, and then people are going to want to buy shares. So they have to buy shares of the stock so that they can sell the shares of the stock to the people who had the option. It's a bit complicated, but basically it means that in the short term, I think that the stock is going to go up in value. So let's take a look into why I think this is going to happen. So if you're buying a call option, and let's say you're buying the $30 call option. So one way to think about it is you're buying an option to purchase a stock at a certain price. And you may think, okay, I think the stock is going to go up, but I'm not sure whether it's going to go up. But if it goes up, I want to be able to buy shares of that stock. So then you buy a call option and you pay a premium for that. The reason you pay a premium is because at the end of the day, you're getting the option in order to buy a stock at a certain price. So you have to give in order to receive. So what happens is now as the stock is getting closer to $30 per share, then the people that are selling you those call options are going to have stock in order to sell you in the event that you exercise your call options. So now the stock is almost at $30 per share, and in the event the stock gets to $32 per share, $33 per share, $35 per share, the people that own call options for $30 per share might want to end up exercising that option, meaning they buy 100 shares at $30 per share. If the stock's trading at $35 per share and you can buy the stock at $30 per share, you might want to do that, right? Wouldn't that make sense? So if you're the person that has sold the call option and you don't have enough shares in order to sell to the public, you have to end up buying shares of the stock so that you can then sell them to the individuals who have those call options. And so this whole process is called a gamma squeeze. So there's the short squeeze, which I mentioned in my last video, meaning that there's a lot of people who have shorted the stock. They have basically said, I think this stock is going to go down and I'm going to sell you shares to a third party person. And then eventually I'm going to buy back those shares. Their goal is to buy back those shares at a lower price. So they sell it to you, they think it's going to go down, the stock goes down, they buy it back, and they buy it back for a lesser value. What sometimes happens is, and what you saw with Gamestop and what you saw with a bunch of other stocks is, as the share price rises, and it rises rapidly, then the people are going to want to buy back their shares because they don't want to take a big loss. So they sold the stock having to buy the stock back, and they want to buy it at a lower price. But if it starts to go up and up and up, then they may buy it back and say, okay, this was no good, I lost my bet, let me buy back my shares. And if there's enough people that are doing this all at once, it's called a short squeeze. So that is what happened when Academy reported a very large and strong earnings last week. The stock went from $23 per share all the way up to $32 per share. And the reason that I know that it was a short squeeze is because the short interest is decreasing. At the time that I made my video, the short interest was 48%. And now today, the short interest is 39%. So that means that there are people that are buying back their shares, and that explains the rapid increase in the share price. Also, you can just attribute to the fact that they had really good earnings, so people want to buy the stock in general. Now, back to the gamma squeeze. Okay, so I pulled up my brokerage and I pulled up ticker symbol ASO's option chain. Now I think that there could be a gamma squeeze because we have 8 days until expiration for the $30 call and the $35 call. The stock last traded at 29, but in after hours the stock is up. So we have all these calls that are on the $30 per share strike price and the $35 per share strike price, and even some on the $40 per share strike price. These are pretty much some home run calls. And the stock is only 8 days away until expiration. So if these hit, so if the stock goes to $32 per share, $37 per share, the people that sold these call options, and they didn't necessarily sell them this week, they most likely sold them a month ago when the stock was trading at like $22 per share, $23 per share. At the time, they were probably thinking there's no way this stock is going to get to $30 per share. Some sucker is going to buy these $30 call options, these $35 call options, and I'm going to end up taking the premium. But now that there was a short squeeze and the stock is actually getting closer to actually hitting the strike price for these call options, these people are going to have to end up buying shares of ASO stock. So I think in the near term, we could see a gamma squeeze in order for them to cover these call options. Again, this is just my opinion. This is what the data is showing me. I've been following ASO stock for quite some time now, and this is what I'm seeing. So if you like this video today, make sure to smash that like button. You can consider subscribing. I'd appreciate it if you did it, but I don't want to force you. You can turn on those notifications so you can be the first to know whenever I find undervalued stocks for you.